Hello again, everyone. This is Greg Donaldson, and I'm continuing in our series of answering questions posed to us by our readers of the blog. Today I want to answer the question of when will the big banks start hiking their dividends again? Today it's a little easier to answer that question than it would have been last week. And the reason for that is that the so-called Basel III agreement, which is the worldwide bank regulators agreed over the weekend on what are known as net capital banking requirements for banks throughout the world and in the United States. And for the most part, it looks to me like the big banks in the United States can already pass most of the regulations that are not at this point scheduled to go into effect for the next several years. So the U.S. banks actually are in better shape from a capital perspective than the foreign banks. So I think that will help both the banks and the regulators in the United States come to some mutual agreement about dividend policy. I have felt for a very long time that the banks realize how important the dividend is to them. And in this new age where banks may be growing a little less rapidly earnings-wise as a result of these new regulations, we believe that the banks will be ever more interested in solidifying relationships with their shareholders through the dividend. So therefore, I have the thought that there will be a couple of big banks that may well try to raise their dividend before the end of 2010, and that the majority of big banks in the United States will initiate some kind of a dividend hike, certainly by the end of the first quarter of 2011. And I'll just give you just a little bit of a bonus. I want to make a projection about what the dividend might look like, and realizing, of course, that this is just pure guess, but there is a little bit of a substantiation of why they may do this. I think you may see a number of the banks initiate a dividend that yields on their current selling price about 2%. The reason for that is that the 10-year Treasury yields somewhere right this minute between 2.5% and 2.75%, and I think the banks want the dividend to approach where a 10-year Treasury is yielding, just to attract some potential investors to say, hey, our dividend yield is not far from the yield on a 10-year Treasury, and we expect that our dividends are going to grow over the next few years. I think that is a real key consideration. And if you work backwards, it looks to me like that means that they would need to pay out about 20% of their earnings in the form of dividends. Now, from paying virtually nothing in the way of dividends today to paying 20% may seem like a big jump, but you have to remember that banks historically have paid between 40 and 50% of their earnings, so I don't see any reason why somewhere around a 20% payout wouldn't be a good place to begin. You could even have some banks that are in a little bit better shape. You may even have them start off with a dividend yield of somewhere around 3%, which would be a little bit higher dividend payout ratio. But anyway, the long story short is the new banking regulations are not onerous to U.S. banks. And provided that we don't have another crisis in front of us that resembles the crisis in 2008, and we certainly don't project that, then I believe the banks will have a good enough handle on their loan losses and on their potential earnings growth over the next few years that they can, during the latter part of 2010 or the early part of 2011, that they can start paying dividends again. And I think they'll pay out in the beginning around 20%, which would mean somewhere around a 2% yield. And I would applaud banks that do that. And I think that's a good beginning. And I think over time, they're going to move back up to a 40% payout and to much higher dividend yields, because under these new regulations, they are going to be crimped a little bit in terms of the amount of risk that they can take. So therefore, in my mind, to attract shareholders and new capital, they need to be paying a substantial dividend. That's all for today. Hope this answers a question that's been floating around for many months, but that's my view. Talk to you soon.